Hi everyone, welcome once again to our property investment training program. Last week, as we have learned about the 5 useful tips to invest in property in 2020, just to recap again, so the first one was always buy a property for cash flow positive, buy below market value to gear up your property portfolio, buy in the right location, and you understand your portfolio gearing ratio and everything else properly. And fifth is treat this property investment as a business. So today we'll be diving deep into each point. Going forward, you'll be seeing like next couple of weeks we'll be going into details. So today let's start with the first point that we had, which is, let's start this. So this part we have learned 5 tools. So today we'll be looking into buying property for a positive cash flow. So what exactly we mean by that? So what we mean by that is, like, first we take all the gross incomes from the property. So depends on what type of property you're buying, but in general we're looking is just compile the number of income that we're going to get from a property. If like a property is a block of or like a commercial mix, so let's say if you have multiple unit in the building, then you of course calculate everything together. But let's say to understand it simply, if it is like a single let family property, then let's say if you are just calculating based on the house or a single property, so first income that you will have is a rental income, actual rental income that's coming from a property. This could be the rental income that you're getting from the property right now, or once you acquired it, you will estimate the value of that rental income. That you need to of course look for comparable evidences. We'll look into that more in details, but let's say for now, for the purpose of calculating the your cash flow, we first take the rental income that comes from the property. And also it could be other factors as well. Let's say if you're looking into a commercial property, or where like you may have additional income, just not from the rental of that property. Let's say if it is a shop, then it can be also possible that you will get income from parking space, or income from, if you have like a satellite or something else on your property, so additional income. So you calculate everything that you get from that property. Second, that's why I said business income. So overall what we are looking is overall income that comes from the property, either as a rental income or otherwise. So you take all those income into consideration. And then third could be your commission. Sometimes you also get commission income from a property. You can also factor that in, while taking your decision whether you should buy that property or not. We'll look into that more in detail. So in general, what we are talking about here is, you work out the number of income that you're getting from that property, calculate them in one go. And once you have that calculation on one side, on the other hand side, you're looking at the gross expenditures. So your expenses could be like a building insurance. If you're whichever property you're buying, a house, commercial, residential, or any type of property, you got to have a building insurance. I would highly recommend that you should have. Normally, of course, if you're mortgaging a property, the lender will ask you a copy of, mandatorily will ask you to insure the building. But even if you are not really required by somebody else, you still buy the building insurance for your property portfolio. Now, second, if you are buying like leasehold property, let's say leasehold flat, you will have a ground rent, service charge, or this type of other expenditures that you should also factor into your calculation. Then you will have a maintenance cost. Maintenance cost generally, let's allow, like, depends on what type of property you're buying, how good it is, but on an average I would say, let's say, allow a 10% budget of your rental income for your maintenance purpose. Now there's another thing here, is this voids. Many times people forget to basically allow any allowances for this. Now this current situation what we are now going through these days. Now imagine, nobody was predicting that this will happen, right? But then in property or any business, like, we need to have some margin of safety. So we always say, allow some void. So let's say, I would say, depends on which area, the type of property that you're buying, I would say 5 to 10% allow for your void period. So which means we are saying somewhere in a region of 2 to 4 weeks, because once your property is empty, in order to relet it, you would take at least 2 to 4 weeks. So allow that as well into a equation. So of course we are looking into the average basically. Let's say even if you will let once, you will have to relet, let's say once in 2 years time, and let's say it takes you 4 weeks. So effectively speaking, you're allowing 2 weeks worth of void in there. Now the way you calculate the whole cash flow, whether you will get a positive cash flow or a negative one, you work it out whether your net income that you calculated from the property is more than all the expenditures when you calculate it. Of course, if that comes positive, there will of course are many things that also you need to consider in the account and take that into account. So this is the return on investment calculator. So you take all your net cash flow, which is like your net income, by taking all your income minus your expenditures, multiply by 100. So you get this formula. Let's say in this current scenario, if you have a property that's paying you £1,000 a month rental, let's say net rental after deducting all the expenditure, that gives you 12,000 per annum. You divide by, let's say if the property you would have bought it for 240, just for keep this calculation easy, we may just assume some numbers here. So 24,000, let's say 240,000 pound, you multiply by 100, that gives you 5% return on investment. Normally the formula will look like this, return on investment. Yeah. Now, to help you out, what I've done is I've uploaded one of the ready-made spreadsheet for you guys. So let me show you on my website. When you go here, this is propertyexpertsacademy.com, and under this section, if you go to this freebie option, yeah, just you can enter your detail here as well, but if not, then here is start on the right foot with this freebies. So here is a download your free property deal analyzer. So just say access now, and when you click this, it will of course prompt you to enter your name, email address, because we like to just see who are our target clients who are buying them. So I mean, just enter here, hit this button, subscribe, and you will be able to get a spreadsheet with all the formula built in. See, you will get like this. So see guys, like I'm trying to give you as much as possible, and while we're just discussing this, I would really appreciate if you can just take your 2 seconds just to hit this subscribe button. That will really make my efforts worthwhile, loading all this information for you and supplying you this free templates and everything, and also by seeing a lot of subscribing my channel regularly, that will keep me motivated to record more and more videos for you guys, so that you can have some benefit. And believe me, like it really takes a lot of efforts to create the videos. I'm not really a professional video creator, but still I'm doing my best to, as you can make it out. So I'm doing my best to really do whatever within my control. So please take just 2 seconds to subscribe this and like these videos, so that I also keep uploading more and more videos like this. So let's say, coming back to this property deal analyzer, you'll see here number 1, what I've done is just, anyways, I've taken some assumptions. Let's say if the property is worth $500,000, you apply, I mean this is if you're buying like property, then you have some legal cost, MDT. Let's say overall property costed you 570,000. So you work out not just the cost of the property, but everything that you spend in refurbishment, in legal cost and everything. So that's your total cost of the property. Here there is a formula, so you can always watch it, whatever you, let's say for example, if your refurbishment cost you 60, you just enter here 60, and that will make your life easy, and it gives you the numbers. Yeah. So let's say I'll undo this now for understanding this calculation. Now again, here all you put it just the rental figure that you're getting from the property. Here you can just put whatever monthly service charge, ground rent, building insurance, everything that you feel, you just enter that here. Void, as I mentioned here, I've taken a half a month, but depends and when you will download, you will get this spreadsheet, by the way. And all you do is depends, like if you feel that you need to apply or you want to give more safety margin, keep 1 month or half a month, whichever way you feel you like to use. Now then I've allowed management fee cost as well, 8%, depends, like whatever it is, 8 to 10% normally it costs. I've taken 8. Now everything is in the formula. Then again, I've taken like a estimated maintenance, I've kept it here 100. Let's say whatever you feel this property would require to spend on, as I mentioned, 5 to 10% you should allow for the rental income here. And then I've taken an initial mortgage at purchase price, so which is here 75% of that, which is of $500,000, you're getting this much. Now So this is what your mortgage will be based on. So now what we are saying in the monthly cash flow, all you will be getting is your rental income, let's say 2,500 in this case. Management fee, which we worked out based on 8% of this rental income, comes 200. Then we have worked out the maintenance, like £100 that we assumed. Of course, you go by your case, whatever applies in your scenario. And then you have taken out the ground rent, service charge, insurance per month. This is how much you will be paying. And I've taken a void period month, but I've taken this for the whole year actually. Yeah, so now you will see the impact of that will go on the whole year. Now and this is your monthly mortgage payment based on 3% rate of interest. You'll see everything formula is here. So you just juggle around the numbers here and then see whatever the scenario is in your case. And now if you see here, it gives you clearly what your monthly cash flow will be after you enter all the figure, and what's your yearly cash flow on this property, and then this is your yield, 6.9%. Would be very precise, like it depends whatever you enter here. So this is how you can calculate your cash flow. And if you definitely see the cash flow comes positive, then this is where you need to be looking at, and whether this rate on return on investment will be worthwhile for you to buy the property for this. So thank you very much for watching this. We'll be uploading more and more videos, so please guys, keep us motivated by subscribing. Hit the subscribe buttons, like, share with your friends, comment and what exactly you like to hear further, or if you have any queries. I've already supplied you this template of this cash flow calculator, deal analyzer calculator, that you can also see. By the way, when you will download that calculator, you will also find, this is just like a calculation for cash flow. You will also find quite a few other sheet here. This is just to figure out whether you should buy the property on a capital part of it, and how the things works. I mean, you can play around with this. There are the different number. I've also in one of the sheet, so when you will download, you will see like 5 years time. So it's some projection I've taken into account. So feel free to understand this, and we'll see you next time.